Then in part C, explain how Grub should set up the just-in-time system correctly to avoid the risk of stock shortages. And that is for 4 marks, so we need to come up with at least 4 discussion points. And in addition to that, you can see there's 1 mark available for communication skills, and that is awarded for clarity of expression. All right, so if we go back to the information provided in the scenario, we know that there have been significant inventory losses in recent years due to the high volume of perishable products purchased, and Grub is considering implementing a just-in-time system. So obviously, before you can answer this part of the required, you need to understand what a just-in-time system is. Now, a just-in-time system means that they are going to try and aim to not hold any inventory at all. And obviously, the reason why they're doing this is because of all of these inventory losses that they've had. They've had high inventory write-offs because of the perishable products that they need to purchase. So if they don't hold too much inventory, then obviously they will reduce the inventory losses or those inventory write-offs. But there are also problems associated to a just-in-time system because you're obviously now very reliant on the supplier. If the supplier doesn't deliver on time, if they deliver the wrong product, if they deliver an inferior quality product that needs to be returned, then there's a risk of stock shortages. There's a risk that they won't have all of the food or the ingredients that they need for the menu items, and when customers come into the restaurants and they want to order things off the menu, they won't be able to supply all of those items, and that will obviously cause reputational damage for the restaurants. So you don't want a situation like that. So if they are going to set up a just-in-time system, they need to do it correctly to try and avoid a situation where they run out of stock. So obviously, guys, they are going to have to enter into contracts with the suppliers. You need to have a contract with a supplier, and it needs to be a supplier that you can trust. They need to be reliable. They need to deliver on time. They can't say they're going to deliver on Monday and they only deliver on Wednesday, and you can't sell any menu items because you don't have the correct ingredients. So they must be reliable. They must deliver on time. They must deliver the correct product and the right quality product, because obviously if they deliver something wrong or the product isn't of the right quality, it needs to be returned, and then we're sitting with the same problem. So they need to be reliable. They need to be also as close as possible to the restaurants, because the closer they are, then if something does go wrong, they can always quickly deliver again, or if there's an issue, they can return it, etc. So the closer they are, the better, to try and avoid that risk of stock shortages. Then in addition to that, there should also be penalty clauses. So if the suppliers obviously don't deliver on time, or if they deliver wrong products or inferior quality products, there should be penalties for that. So you try as far as possible to manage the suppliers so you don't have a situation where you run out of inventory. Okay. So they need long-term contracts with the suppliers. The suppliers must be in close proximity to the restaurants. They must be reliable in terms of the quality of products and timely delivery. There should be penalty clauses in the contracts for inferior quality and or late deliveries. And then if you discussed any other valid point over there, you can also award yourself a mark. All right, so you really shouldn't have struggled with that part of the required. Let's then move on to part D. What financial, manufactured, and intellectual capital is used by Grub to create value? All right, now this one you might have struggled with because this comes from the lecture on strategy, and as soon as something a little bit different is asked with strategy, it tends to throw students. So I'm just going to give you a little bit of background information here before we get to our suggested solution for this specific scenario. If you go back to your lecture notes on strategy, to the section where we looked at the business model of a company, you'll remember we said that a business model explains how a company achieves sustainable value. And the ability of the company to generate value depends on the environment that they operate in, their relationship with stakeholders, and also their access to resources or capitals. So these are capitals over here. Now, there are 6 different types of resources or capitals defined in your lecture notes. We have financial capital, manufactured capital, human capital, intellectual capital, natural capital, and then lastly, social and relationship capital. So what it does is the 6 different types of capitals companies use those capitals in order to create value, the capitals or the resources that they have in order to create value. Now, in this part of the required, you don't need to discuss all of the 6 different types of capital. You only need to focus on financial capital, manufactured capital, and intellectual capital. Now, guys, financial capital is funds that are available to the company through debt or equity sources. Manufactured capital is tangible assets such as property, plant, and equipment, buildings, equipment, infrastructure, etc. And then lastly, intellectual capital is intangible assets, things that give the company a competitive advantage, such as patents, copyrights, brands, etc. So for these 3 different capitals, we need to explain how Grub uses these capitals to create value. So let's look at each one separately. I said to you, financial capital is funds available to the entity through debt and equity sources. So what funds does Grub have available to it? Or what financial capital are they using to create value? Firstly, we know that the company is listed on the JSE. So the fact that they are listed means it's easier for them to raise new equity finance if necessary. They can just issue new shares. In addition to that, we were given the dividend payout ratio. The dividend payout ratio is only 20%. That means that 80% of the earnings are retained in the business to fund expansion and growth. So they have a very conservative or a very low dividend payout ratio. So they're keeping a lot of the company's earnings and cash in the business. And that is obviously a financial capital that can be used to fund future investment opportunities. In addition to that, from our previous calculations, in Part B, we saw when we compared the target capital structure to the current capital structure, that the company currently has a very low level of gearing compared to their target capital structure. They currently have capacity for debt finance. So that's also another financial capital. They have capacity to raise more debt finance if necessary, because they currently have a very low level of gearing compared to their target capital structure. All right, so let's have a look at that first. Financial capital. Grub is listed on the JSE, making it easier to raise new equity finance if necessary. Only 20% of earnings are paid out as a dividend, so they have a conservative dividend policy, and 80% of the earnings are retained in the business to fund expansion or growth. They also have a very low level of gearing, and they therefore have capacity to raise debt finance. Then next we need to discuss manufactured capital. So manufactured capital is tangible assets such as property, plant and equipment, buildings, machinery, infrastructure, etc. So once again, go back to the information provided in the scenario. Firstly, we know that they own the head office in Cape Town because they purchased their head office in Cape Town 25 years ago. So they own that head office. So that's obviously land and buildings that they own. In addition to that, they'll obviously have furniture and equipment in the head office building. We also know that they have a sauce factory. They own and operate a sauce manufacturing plant. So obviously the land and buildings for the sauce manufacturing plant is manufactured capital, and also any of the machinery that is used in this plant. So for manufactured capital, land and buildings, they have their head office in Cape Town and also the sauce manufacturing plant. They have machinery in the sauce manufacturing plant, and they have furniture and equipment in their head office building. Then lastly, intellectual capital. So that's intangible assets such as brands, copyright, patents, etc. that give the company a competitive advantage. So once again, if you go back to the information provided, we know that the group has 8 world-class restaurant brands. So the brand is an intangible asset that gives the company a competitive advantage, and that would obviously be intellectual capital. Then in addition to that, guys, we know that we are dealing with a franchise model over here, and the company's been going for 51 years. So they've obviously managed to create a successful franchise model that works for this group. So that's a process or an intangible asset that gives them a competitive advantage. So for intellectual capital, we've got the 8 distinct restaurant brands, distinctive restaurant brands, and they've also developed a successful franchise model. All right, so that then answers part D of the required, and if you didn't focus too much on the lecture on strategy, you might have struggled a little bit with this. Hopefully now when you look at the suggested solution, you can see it's really not too difficult. Make sure that you understand everything, guys, because remember, what we cover in the lecture is all of the theory. At this level, at CTA, they're never going to ask you to just regurgitate the theory. You're going to have to take the theory that you've studied in the lecture and you're going to have to apply it to the scenario. So applying this to the scenario, knowing the theory, knowing what each of these capitals are, apply it to the scenario so that we can see how Grub is using these 3 capitals to create value. All right, so that's then everything for this question. If you're still struggling with anything, please let me know. Thank you, guys.